Very good morning from London. Welcome to the RANsquawk European briefing for today, the 17th of August. Starting with the equity markets, we did see some early lagging in the tech and financial sectors, the tech sector being weighed by Dell's cutting of their full-year revenue forecast aftermarket in the US last night. Also aftermarket for the European space yesterday was the Merkel-Sarkozy meeting, in which they were to introduce a financial transaction tax across Europe. Also, they highlighted their reluctance against Eurobonds or increasing the size of the EFSF, weighing on the financial sector this morning. Also, taking a look at the currency space in Europe, we saw some aggressive strengthening of the Swissy, the Swiss National Bank, preempting the Swiss government meeting at 8 o'clock London time by coming out and saying they were to move back into the markets to counteract the strong Swiss franc. However, as markets participants were anticipating a Euro-Swiss peg of some sort, which did not materialise, we saw some aggressive strengthening of the Swiss currency. We also saw the release of the Bank of England minutes for August today, showing a 9-0 vote to keep rates unchanged at 0.5%. Only Adam Posen advocating some further QE, and on the back of that we saw some weakness in the sterling currency. This was allied with the unemployment data coming out at the same time, which showed an increase in unemployment in the UK. However, the sterling currency has recovered from its lows, cable now trading up in positive territory. Looking elsewhere, some fixed income news. We were looking at the spreads this morning to widen following the Merkel-Sarkozy comments yesterday, but have stayed broadly unchanged. There is some market talk that the ECB is back reactivating the S&P, looking at Italian and Spanish paper there. We have seen them in the markets recently looking at the shorter end of the Italian and Spanish curves. Also, for the energy complex, following the release of the APIs last night, the headline crude oil inventories was bearish. However, the bullishness of the gasoline inventories especially has lifted the energy complex through early morning trade. We've also seen spot gold hit record highs throughout the session, trading consistently above the 1790 level. So that has supported the energy complex as they look towards the DOE data later on out of the US. But that's enough from me. Have yourselves a great trading day.